YouTube, Facebook, we get you going simultaneously. So, as you all know, today the equity markets were closed. Futures, however, were open. So, because we had practically a full day, I don't believe they even closed the futures market at all today. We get a full day of information that we don't. Well, I love watching futures as opposed to cash. At least as a reference, meaning that I would rather watch the ES as opposed to watching the SPX, E-mini S&P future. I believe that's a CME product. So bonds, I mean, volumes don't look like they were very considerable today. Here in bonds, I guarantee it's probably the same way in crude and stocks. So nothing to really write home. Bonds slightly higher, two below one. So we had a pretty big day Friday with them hitting this thing pretty hard. So it's kind of to be expected there. Crude oil, we did see a little bit of upside there. They're not for some reason. This is just trading view. I've just been really having some issues with them. I could do it by hand, but it's 2019, folks. Why would I do that? Crude oil was marginally higher today on pretty low volume. I think we're getting ready to roll into February. That could be why these volumes are so light. Because I'm looking at the continuous contract on TradingView constantly. So like for crude, it'd be CL1 exclamation mark continuous front month, and yeah, same thing. Yeah, we're there, so they're just rolling. S&P, so we did gap down last night, and I do apologize I didn't get on last night, but I figured cash isn't even open today. So on pretty light volume S&P, we had a huge day on Friday, up I think about 1.5% if I recall correctly. Yeah, 1.53%, which is a huge move for a stock index. So they did pull this back a little bit in here today, not much. They're off about 5 points right now, but nothing really to write home yet. We'll see what happens when this thing gets a little closer to home. We are pretty extended here in the indexes. Not sorry about that. Not so much in these and some individual stocks that I'm probably going to go over tonight. Okay, Nasdaq. We don't need to do it. The dollar's really been on a nice little march, primarily led by the euro. The euro is not. It's been tied in a range. It looked like it was breaking out, and it really fell apart. You got all that Brexit nonsense. This whole Theresa May, all this other jazz, distraction kind of material in the news. But in order for it to really be a breakdown in the euro, we're going to have to get below 113. I mean, that's just the bottom line. Continue watching 113. And if you look in here, I have 113. We did get below 113, and they defended it pretty solidly. But 113 has been a level historically that we have bounced off of and supported at really for several. We're going out to long time frames, yeah, all the way back to like 2016. So it's a pretty important number here. And if we're looking at a historical level at the euro, and this is something that I'm trying to be more involved with, is looking at longer term prices as opposed to just oh my gosh, 2 going above 1, or moving average right here. I've really been hitting home and get in, looking at longer term kind of numbers. And really, the euro has been in a downtrend. We did top out back in '08, right around the highs around 160 on euro to dollar, and it just continues getting, going lower. So really, on a historical level, over looking at years of data as opposed to just looking at today, really we're just consolidating and looking for more downside in the euro as we look at longer term area. We do have a set up trend line right around 111, so that'd be, sorry, not much sleep. You know how that is when you're grinding, being busy. Okay, so we have 113. We'll give you some pretty significant profits in there. 113 coincidentally, now I'm looking at the weekly time frame on the euro. That's right down around the 200 week moving average. See, I knew there was a reason that I put that in there. Because when it comes to currencies, like, I'm not a day trader. I don't like day trading. Never have. Will I do it? Sure. If I have a day off work, I'm at home, nothing better to do, I will go ahead and put off some day trades, mostly in SPY options. But other than that, I just don't do it because you totally can. But I think it's very difficult. And if you're somebody that's not sitting in front of your computer all day long, and you work a full-time job, or kids, or whatever it is that you do, I just think it's very difficult to do anything day trading. So I'm looking at this, and you get some FXE options if you're looking to play this thing, which typically I don't, because I just don't think that the gains on it are large enough to be worth the risk. You really want to start going on a little bit further. And then go down to the daily time frame for entries, daily, 4 hour, whatever it may be. Yes, I'm repping Ohio. Technically, this week in the euro on the weekly, this is the red 2, which is not going below the red 1 as of right now. But we do have some time. And I'm liking that we almost have, it's hard to call it a descending triangle because we don't have enough points for the top. So yeah, 113, just continuing to watch that. I'm not putting anything on there until we get below there and hold it on the weekly time frame. So what are the implications there? And I keep talking about this. I know I talked about it on Facebook. In regards to, we're looking at gold and commodities, dollar price commodity. You're always going to see a little bit of correlation between the dollar and dollar priced commodities. And I've been playing around with these grains a little bit more as of late. So what kind of implications really are we looking at here? You know what? We have more of a channel tool. What am I doing using trend lines? So, parallel channel. You could call that something. You get into diagonal barriers technical analysis is they're so subjective. I mean, with a horizontal level, it's a little bit more difficult to debate where that level belongs. But these diagonals, because you can say, oh, we're going to wicks or we're going to closes. I like going to closes. To me, closes mean a lot more than intraday ranges, just as a matter of opinion. So that's generally where I'm going to be going. But back to the dollar, because that's really the main subject here, and this is really something I've been fascinated with lately. And if anybody out there has any kind of observations, I'd love to hear them. I know Tyler Jenks, the Hyperwave, over at the Hyperwave channel, was talking about a stronger dollar, which was a very bold prediction. And right now, after this past week, the dollar bouncing here at the 200-day as well as the 50-day moving average, that could be something there. So basically what we're looking at with the dollar and the euro, the thing that's fascinating me. The euro makes up a big portion of the dollar index, as you may know. I know we had a squeeze in there. That explains that. There's the volume day. Now, so in regards to commodities, like gold, okay, I place my trades on gold and silver, and now that I'm getting into like soybeans and corn, I do reference the dollar because I think that's very important. And like relationships like this, these correlations, just really fascinate me. How these things all just kind of blend together. All these markets they're all correlated in some way or another. They're all connected. There's only so much money on this earth, and if it's leaving one place, it's of course going into another. So as it leaves the euro and goes back into the dollar, driving up the price of the dollar, that's going to have an impact on gold. And gold is something I will do GLD credit spreads every so slightly. I put some credit spreads on. Probably not a good idea because gold get hammered here. Yeah, off about 50 cents an ounce right now in regards to the futures. And the countdown phase, we actually have a red 12, which if we get a red 13, that could be explosive for gold. That's something I also didn't see because I'm starting to use sequential less and less every day because I'm just starting to find that it really isn't quite as accurate at finding tops and bottoms, and you really miss a really good portion, especially that's like with gold, some of these stock indexes, like you really miss a very large chunk of a move because you are getting out on a perfected 9. So I'm just really starting to get to sequential more now as a tool to tell me like, hey, we're probably a little bit extended here. It may be, so it's like an entry tool. It's like become like stochastics. It's like, okay, I want to buy this. Well, these stochastic territory. This isn't missing a lot of really good action. I'm just solely relying on it. But I will continue to use it. These 13s are the most, in the countdown phase, are really the most important. Yeah, silver not having a very good time either. To me, I don't think that a bear flag is off the table here in silver. I'll put it up here. It's again YouTube, you can't see, but that's what it is. We're right testing this 200-day moving average right now. I I'm gonna take an average in silver. So if you're gonna be a buyer, and we're pretty far from the ADMA as well. So if you're taking a silver position long, probably a good time to do it. That looks to me 50%. I'll find out. Fibonacci. I go from the close in Fibonacci as well. And Fibonacci wise, I'm going all the way to the bottom at 1397. No, we're not even to the 618 yet. Stands for this move. 618 is 15 tenths or 18 cents off the 618. So I use Fibonacci's today, and it's going to have to be today, because if they take silver much lower than 1520, I think the long is probably off the table if they don't hold the 200-day moving average, because the next major support that I would see would probably be the 50 at about 1486, and at that point maybe I'd be a buyer, probably not. Historically, these precious metals, especially silver, really has not done very well. Gold, it was for a while. I'm just not a bull on gold. And because I think the dollar's getting ready to get stronger, excuse me, I think metals are probably going to get hit pretty hard. And if you go in, we had a pretty major support level here in gold that got breached. We were forming this ascending triangle right here, but we couldn't break 1370. We tried 3 times. You could call this middle one. No, we tried again and it failed. 5, yeah. And we failed the uptrending support patterns. So that ultimately will get you hurt. Bitcoin, it just looks horrendous. I think 4,500 is probably off the table at this point in Bitcoin. I don't think we're going to go, I think we're going lower at this point. I don't think there's really a sufficient argument to say otherwise. Obviously anything can happen, so I'm not going to be like, yeah, this is happening, this is it. But at this point I'm far more bearish Bitcoin than I am bullish. I would almost say 70-30 at this point. Yeah, we do have the 13 coming in here on the weekly chart, or on the daily chart, which would have been yesterday. Red 13 countdown. So we're gonna see if that amounts to anything. I don't believe so. I just get so excited with Bitcoin. Oh my God, this company is investing in crypto storage, whatever. Like, okay, they're building the infrastructure, but the price versus what's going on in the news aren't always correlated in a bear market, like about the news. When things start turning around in crypto, maybe I'll mention more news. But right now, I think the most important thing to do with the crypto market is just stay objective and not to believe any of the crap that they're putting out in the news. Natural gas got decimated. Not to be surprised if I'm talking about it. Equities higher, GDP. As China GDP slows. Nice. Yeah, so it did come in and support right about the 20 period on nat gas. Looks like it's tried to bounce. It did gap pretty strong here in the open. Probably because they're rolling contracts right now, I would imagine. So soybeans, I did put a position on here. I will be flat honest anytime I'm talking about something. I do have a position on in soybeans. I call options on SOYB, on trade futures, as I've mentioned in the past. Beans did gap up. Two going above a 1 now. I have 920 as a resistance level. We'll go ahead and see. I think they're getting ready for a huge breakout. Massive ascending triangle. This is almost too good to be true. I only have kind of 2 points coming in here, though, which some of you might question, but we're breaking above the 200-day moving average as well, which I like to see. And on the weekly time frame, we're holding in pretty nicely. I remember these trends in commodities tend to be a little bit longer and dragged out versus equities. In the futures, I should say, because these are hedging tools. So the way that they trade is a little different sometimes. Oh my goodness, excuse me. Whatever, I'll do it later. The break above 920. We do have the 50-day, 50-week moving average coming in at 930 on beans. I think that might be a problem because we have been rallying up pretty nice here. We're not that far from the ADMA though, so I would not say that price is too extended here. So I'm liking it. Corn, I don't have anything on in corn. We did just have a price flip yesterday. Pretty wild, pretty wild price action there. Because it's, never mind, excuse me, that's the weekly chart. Yeah, so the price flipping on the weekly chart. Excuse me. There's a lot of whack today. I don't know what it is. I'm sure you folks have those days where it's just weird. Probably because it's a Monday. No market, so my mind is elsewhere. Okay, so we have a 2 going above a 1, and I'm not sure if this is just from the rollover or if this is because this is continuous. Once again, corn futures, that's what I'm referencing. 2 going above a 1. It did defend the 200-day moving average now for a second time. We had the golden cross back in December, late December, the 19th of December. And we got rejected right by a setup trend line. Oh, excuse me, I do not mean to be coughing into here. It happens. So as a whole, I would say that corn is in a nice uptrend at the moment. I'm liking the way it's holding. I feel like my penmanship. 404, for any kind of long trade on corn, 404 is the target. I'd say this week, I'd like to see that 2 going above the 1. Could see a little fraction of breakout right here. It looks like we kind of are right now. That's a 2-touch diet. Two-touch diagonal there. But it is breaking above there. So if we get a nice close higher this week, I'd be pretty comfortable calling, corn going to 404. We got wheat, which really isn't doing a whole lot. Probably a good time to sell some premium. This is the weekly time frame. You have to do futures options though, because I don't believe premium in the wheat ETF is even worth the risk. So you'd have to go, if you're doing a longer term kind of strangle, you'd probably have to go a little bit further out. Maybe a 500 and a 540. Strangle, let's see, 30 days seems to be the good number for selling premium. But I don't know, I don't like chasing trades, so I probably would just leave wheat alone until it decides to make up its mind. Individual stocks, let's see, what did I put on this week? I just like going down my list. And I don't care as much about weekly stuff. Yeah, Starbucks is kind of has a hair of a breakout. I think that's a daily breakout. And we did break this kind of 64.40 level at last. The uptrending support, so we'd have a target of about $68. I would take $68 as a profit target. Here in Starbucks, I see is a broader sell-off. Be careful with some of these long positions here. Yeah, United Continental, I'd be pretty comfortable selling that. Shorting any gap ups in or off of earnings. I think that's going to be a pretty solid trade if the broader market takes a hit this week. And I think United Continental will be a good example. I mean, look at this. They're gapping this thing up and it's staying in a range. It's not moving at all, so that just tells me that there's not a lot of conviction in here. And on the day of earnings, after earnings, because I think they announced them after market, I don't even care, because I don't trade around earnings, I trade after earnings. I don't trade before earnings, because if you're buying premium, which is what I like to do about 60 to 70% of the time, you're going to get crushed. Now, anybody that trades options will tell you don't buy premium prior to earnings, because odds are when they crush IV, you're just going to get hammered, so just don't do it. So I like to go after earnings. When they gap it up big and close it lower, that's just a good sign to me that I don't want to be involved. It could go higher, but I don't want to be involved. Procter & Gamble tried going above that 50 with the big gap. It didn't really go anywhere. U.S. Steel, I did get burned in U.S. Steel. I'm probably going to do another U.S. Steel trade sooner than later. We got the 50-day moving average coming up here in U.S. Steel. We're sitting at 22.34. 50-day moving average here in U.S. Steel. 2 going above a 1 on sequential. Still relatively close to the 8 EMA, so if you really want to squeeze another dollar out of this thing, you could, I guess, put something on. If you look at a kind of a longer outlook on U.S. Steel, and this is one thing that I don't particularly like. Number one, we've been getting hammered for a long time. And if you're shorting U.S. Steel, you do have a 2 going above a 1. Alright, on the weekly time frame, which is something to always consider. You do have earnings coming up on the 30th of January. It's one nice thing TradingView does give you that information. So if this thing stays sideways, you can buy premium, week and a half out, and IV pops. can make a little money like that. I don't think it's, you don't really make enough money doing that for it to really be worth it. From a weekly time frame, where do I see resistance? A 200-week moving average at 2430. But we're just now starting to test the EMA, and we got pretty far away from there for some time. So would I be a buyer here on U.S. Steel based on the weekly? No, and yes, I have a short bias on the stock. So I try not to be biased, but instead of buying this and trying to squeeze the, pennies out, I'm going for dollars to the downside. We gotta know about Big Mama, which is Apple. So that's my new name for Apple, Big Mama. 'Cause that's what it is. It's the mama of the market. I mean, if Apple's down, odds are so's the Dow, so's the S&P. That's just the crude reality of the matter. Apple did have a 2 above a 1. We got nice crossing through the 20, crossing through the 80 MA. Gap up with the rest of the market this week. We have set up trend line 169. It wouldn't surprise me to see a pretty strong move here in Apple. I mean, I know that we had all this nonsense, about their iPhone sales are dropping, whatever, new stuff, distraction kind of things. But Apple really hasn't had a solid correction since really all this mess started last year. It's just been, you see this chart here, and it's just been getting absolutely decimated for quite some time now, for months. And when we don't see, even in bear markets, we need to see corrections. So to see a 170 Apple before correction, I think that's totally plausible. I'm not putting any money on that one, but it wouldn't surprise me to continue to see a little bit more upside here in Apple, because, and I was guilty of this, and I'll be the first one to admit it. I was a little bit too bearish, a little bit too early, and I got hurt because of it. I took off all my shorts. It's shaking out. That's all right, because good money management. So Johnson & Johnson, one that I had short call spread on, is testing the 200-day moving average right now. We do have earnings the 22nd, which is tomorrow. So probably won't touch that until after earnings. Applied Materials, yeah, I got pulled on Applied Materials. I'm going to be the first one to tell you. I was selling it back at 31, 32, buying puts back there. Very strong stock. We had 3 days of weakness. I was really getting hopeful, and then bang, defended that 50 pretty solidly, and then Friday, huge gap up, and now we're broke 36 on Friday. So sometimes they just don't work your way. Sometimes I just have been on a bad streak lately. I don't know what it is. I haven't had any really good wins lately. It just happens. Verizon here, not looking so hot. We did have the 2 below the 1. Friday, despite all the strength in the market, this could not break the 50-day moving average. That's a perfect candle. That would have been a great day to be buying some puts. We did have the perfected 9 back there. That would have been your day to actually buy the puts. And had you have, you would have been profitable last Thursday. That's a pretty good sign, though. Now we're below the 8. Couldn't even get above the 8 there, so that's a pretty not good sign for Verizon here, but Verizon was just like Procter and Gamble. It kept, making highs despite all the market sell-off. Pacific Gas and Electric, bankruptcy darkens outlook for renewable energy investment. I'm surprised the stock is even still trading, because I think it's pretty evident now they're going into bankruptcy. If you can buy some puts, if they even still have them on the stock and they're reasonably priced, I'd pick as many of them up as you can. Obviously within your risk parameters. Alcoa, I don't think they had very good earnings. They gapped it down, but they did end up closing it higher, and they made a swing high actually on that. Gap up, and then they sold it off Friday. I probably would not be touching Alcoa. It looks like it is getting rejected by the 50-day moving average. Too early to short that one. I mean, what are we looking at? Swing low, $25, 25.14. Should be probably about $4 out of there. Could be a nice little profit, but I wouldn't be shorting it yet. Bed Bath and Beyond, I think we're getting ready to come finally back up to 16.25. This was actually, I think, my only profitable trade last week. Excuse me. My only one. I sold a call credit spread at a $15 one, and I pulled a little bit of premium out of that, and then ended up closing that one on Friday. Yeah, we are coming back to the mean here. In my world, the mean is the ADMA, and they did actually have a positive close on Friday, which is, probably if you're gonna ride this thing up to the 200-day moving average, you probably should have been buying Friday. If not, pick some up tomorrow if you plan on trying to get anything out of there. But other than that, I don't see this thing going above the 200, which continues falling. We're now about 16.23. Lennar doing exactly what I wanted it to do. Housing market is not healthy right now. And the fact that Lennar was strong into earnings, and we had, I mean, it really kind of blew my mind. Yeah, pretty good surprise on Lennar, and my quite frank opinion on the matter of Lennar is that they had very low forecasts, much lower forecasts, and they barely, they beat their expectations, but I think the only reason that happened was due to the simple fact that they had very low projections, and this surprise probably shocked a lot of people. 2 below 1 on Lennar. Probably a good, if we see a little bit of positive, a little bit of green tomorrow on Lennar, probably a good time to short. I'd be comfortable shorting Lennar here. The only problem I see with Lennar here is we do have this 43.84 level, give or take. That was prior resistance, so we could run into a little bit of issues there. Then we have the 50-day moving average down around $42. I don't think that'll be much of a problem. I think that they, really were pricing this earnings in, and I think that's it. Things are gone, or they got everybody on earnings, and that topped right at a 9, shockingly. Morgan Stanley, I actually picked up a position. I don't believe their earnings were quite as good as the rest of the market. Yeah, 9-cent surprise. Estimate 89 cents, earnings 80. And they did gap down. They supported right on the 50-day moving average, doji type day. pretty big volume too, which is beautiful. Very big volume. And the following day, despite the fact that they missed their earnings estimate, gapped up and finished very strong. So we're supporting on a major moving average, very large volume coming on earnings, as well as just the entire banking sector has done very well with this earnings season. So I'm pretty bullish on bank stocks, at least short term. Target's probably somewhere around $47, 200-day moving average. I don't think we'll get much further than that. Remember, we are in a bear market overall, so having insane upside kind of projections is silly. Aurora Cannabis. And I really want to get into some of these pot stocks. Obviously, I'm not going to be buying them, just holding them. I'm doing the same thing I do with crypto. I'm going to look for good technical entries into some of these pot stocks. Aurora doesn't look anything like I want to be buying right now. Couldn't hold the 200-day moving average, so not looking so hot. Cron, which seems to be everybody's favorite. Cron, actually did just make a new swing high, taking out taking out that 1350 level. Cron looks hot. You probably excuse me. You probably want to wait for a pullback though in Cron. That's looking a little bit toppy there. Way past the 9, way away from that ADMA. We did just blow through this setup trend at 1331, which is bullish, but I probably wouldn't not want to be taking a position in Cron right now, even though we did have the price flip. I just refuse to take a position anymore unless it's close to the ADMA. Because me personally, I don't like sitting through that day or two of correction that it just makes my nerves curl. So I'd rather just wait. I'm doing a slight adjustment to my watch list right now. Wow, which is just getting bigger by the day. Tilray. If you guys have any good pot stocks, I'm always open to ideas. Tilray got hammered on Friday, down about 7.5%. The big day really last week was the 15th, so I think that was Tuesday. Down 16.5%, and it continues to follow through. 2 below the 1, we're now below the 20 as well as the ADMA. 50's heading down. So Tilray looks like could be the first pot stock that I start getting involved with. And I know I'm late to the party here, but that's why I'm looking for good entries as opposed to just just loading the boat and just buying everything up. And going through a cryptocurrency market cycle, seeing stuff like this now it's almost like child's play. Except Tilray, what was the low here? $22 went up over 1,000%, hit almost 300 at the high. I was not aware of this, but I guess they have not been around very long. They haven't even been public for a full year. 65 looks like a decent level. Otherwise, unless we're doing a Bitcoin kind of market cycle here, $34, $33, $34 area is probably your most likely target. problem with these things when they explode like this. They don't. Uh, the higher and faster these things go, the uglier it's going to be. Now, 33 or $34 Tilray, I totally will be a very big buyer. Outright like that. Even though it's in an industry I'm a very firm supporter of. Oh my God! Look at that, 13 one day before the high. That is nuts. That's why I see the 13s are more. I think are more reliable than the sequential. All right, so we're coming up on 50 minutes here. I just need to Facebook ended. I'm utterly shocked. Been having some issues with Facebook too. They'll cut my video off. 19 minutes. Bummer. Well, YouTube, good thing you're reliable. Yes, we're gonna whiz. You guys can't see these things, so I'm gonna whiz through these. Micron, yeah, breaking out. I like that one. Breaking the 50 on Micron. Real breakout probably wouldn't be till about $37 if we're looking price wise. AT&T coming up to 200. Probably could have a little bit of issues there. We've had a nice little run here. Got a mock kind of very tiny ascending triangle. You probably would see that on smaller time frames. So bottom, if we're looking at close 30, so we're only looking at about $1 move from that. But if that pattern's true, that pushes this thing right through that 200-day moving average. Should probably come in 1 or 2 days. AT&T doesn't really get quite the kind of price moves in a stock like that. Wells Fargo, very strong. I got some banking stocks. I refuse to take a long position though in Wells Fargo because they're a bunch of crooks, and I'll openly admit it. Like I don't even remember what I didn't ever had a bank account or any of that stuff through them. I think they had my retirement, but I was part of that lawsuit there with them doing their shiesty little thing. Square 2 above 1, above the 200, above all the moving averages. Beautiful little setup there. Qualcomm, still not really doing much. Did gap up, but I'm looking for, since we do have a little bit of triangle forming in here, not as much as I'd like to see. Got denied. It's best fit. Yeah, so we're getting close to the wick, so you could call that 3. Yeah, Qualcomm does have the descending triangle. Which some people might refute because we only had one bottom level here. If on this level they do take this below, I'd be comfortable calling it exactly that. Last one of the day, this is just really long. Intel breaking the 200-day moving average. Last time I got hammered below there. Considering the fact that we're breaking above it again, I'd be comfortable saying that this could be a pretty solid breakout because the 50 and the 20 are coming up, and we had a pretty solid momentum shift on Friday, so I think that could be enough to get Intel rocking and rolling. So on that note, folks, I think that's going to be about it. Is one for him, go up and give me a name, I'll give you my opinion about what I think exactly. But on that note, I'm gonna go ahead and